targeting 62,000 for Bitcoin by the end of March. I think there's a good chance we're making our lows for the first half, like this week. So Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62. But that's not a bearish development. It's just a retracement. To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But the investors view this as a crisis when it's really a growth scare. Is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, co-founder and head of research at Fundstrat, believes Bitcoin could reach $62,000 by the end of March despite its recent pullback. He points out that Bitcoin has been following predictable cycles, and the current downturn is part of a typical retracement, not a bearish trend. While short-term volatility may cause uncertainty, Lee sees this as a growth scare rather than a crisis. He remains confident in Bitcoin's long-term potential, with more institutional adoption and increasing investor trust in its future. Lee highlights that Bitcoin is still a risk-on asset, meaning it's susceptible to broader market pressures, like economic uncertainty and tariff. However, he believes the ongoing pullback should not deter long-term investors, as Bitcoin's use case continues to improve. While the near-term outlook remains uncertain, Lee emphasizes that Bitcoin's trajectory remains positive, with more people expected to own it in the coming years. The key to Bitcoin's success lies in its growing acceptance as a store of value, similar to gold. As the market navigates through current uncertainties, including tariffs and recession fears, Lee acknowledges that Bitcoin's volatility is likely to continue. If the Federal Reserve cuts rates due to economic slowdown, Bitcoin could benefit from increased liquidity, but in times of fear, it could struggle. Investors are closely watching these economic policies, and Bitcoin's next major move will depend on how the situation unfolds.
Think back over the last year in Bitcoin in particular, right? We had the approval of the ETFs. We had a big ramp in those things. Then we saw it go sideways for, I want to say 7-8 months until the election. And then it goes from basically 65,000 up to 105,000. And now it's back here. It broke below that 90,000 level. And maybe it's like 84,000 or something like that. Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but, Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now. I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and it's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. I mean, the only thing is I'm I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah. I'll
guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than expected, because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat, and I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want. I'm
not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is.
Tom Lee from Fundstrat predicts that Bitcoin could reach $62,000 by the end of March, citing it as a natural retracement within its typical volatility cycle. While Bitcoin has faced recent price drops, Lee doesn't view this as a bearish sign but rather as part of the broader market's fluctuations. He believes Bitcoin's long-term outlook remains strong due to growing institutional interest and its increasing role as a store of value. However, Lee acknowledges that Bitcoin, as a risk-on asset, remains sensitive to broader economic conditions, such as tariffs and market uncertainty. While short-term turbulence is expected, especially with ongoing concerns about inflation and the Federal Reserve's policies, he maintains a positive view on Bitcoin's future, especially as more people enter the space and its usefulness grows.
The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's a fact. Because if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused, well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. And but then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because a shallow recession. A recession is unknown once it starts. I'd say that I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. And I'm not a Fed watcher, but we do watch what the markets are pricing. The market's only pricing a 27% probability of a cut in May. And by the way, the bond market's also, if you look at distribution, pricing a 23% chance of a Fed hike. So there's still a very large cohort that is quite hawkish in the bond world. I would guess that as this tariff stuff causes confidence to fall down and Doge, etc., that 23% chance of a hike goes to zero. But I also think the odds of a May cut should be higher than 27%. The market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner.
Tom Lee, co-founder of Fundstrat, believes Bitcoin has a good chance of reaching $62,000 by the end of March, citing it as part of the natural market cycle. Despite Bitcoin's recent downturn, Lee explains that this is not a cause for concern. It's simply a typical retracement, and he doesn't consider it a bearish signal. He suggests that Bitcoin's volatility is expected, and while it's a risk-on asset influenced by broader market conditions, such as tariffs and inflation, the long-term trajectory remains positive. Lee anticipates that more investors will enter the space, and Bitcoin's role as a store of value will continue to strengthen. In the short term, Lee recognizes that Bitcoin's price may continue to slide until it hits $62,000, but he remains optimistic about its future. With increasing institutional adoption and growing trust, he believes Bitcoin will ultimately gain more widespread acceptance. However, he also acknowledges that external economic factors could influence its near-term price movement. Despite these fluctuations, Lee remains bullish on Bitcoin's long-term potential. Do you agree with Tom Lee's prediction of Bitcoin reaching $62,000 by the end of March? How do you see Bitcoin evolving as a store of value over the next 5 years? Feel free to share your thoughts in the comments below.